Good afternoon. Welcome to Daily Currency Update from the Currency Desk. On the first trading session of the week, that is on Monday, we witnessed upside and downside both movements throughout the day, but at the end of the day we saw the Indian rupee end with losses. Earlier in the day, we had the trade deficit data coming in much better than expected for the Indian economy, and based on this trade deficit data, we had a strong rally in the Indian rupee of around 20 paise. But after that, in the afternoon session, as the European markets opened and we had a few economic data from the European front coming in lower than expected, based on this data, we saw the dollar again gain against the Indian rupee. Today, we had the IIP data which came in better than expected, supporting the Indian rupee to move up to a certain extent, but immediately after that, or along with that, we had the consumer price inflation data which came in higher than expected, and based on this, again it puts a gloomy picture in front of us, and this again puts a doubt over whether the RBI would continue its policy rate cut in the current month's policy review. So based on this, we again witnessed the dollar rally against the Indian rupee. The dollar rally was also supported by the fact that we had a few lower than expected economic data from the European front, like the German CPI and the German WPI data. All in all, we expect the Indian rupee to bounce back from around 54.20 levels in the spot. So one can buy at current levels with a stop loss of 54.20 in the spot. Coming to Europe, Euro fell against most of the other international forex majors, mainly against USD because the US dollar is also holding a lot of strength since the last week jobs data, and traders are also speculating that the Federal Reserve would do away with the QE or at least reduce the QE, considering that the job scenario has improved quite a bit. Based on this, we had some losses for the Euro yesterday intraday against the Indian rupee as well. Now the political scenario in Italy also continues to be uncertain. The president Napolitano has stated that he would try to avoid a re-election and try to have a party formed, ruling party formed and the opposition party formed amongst the current result only. Still, until this political scenario is not resolved, the euro would continue to remain under pressure. So we would recommend only sell the euro on any rise that we see at current levels. Now coming to we would recommend a sell in euro at current levels with a stop loss of 71.11 for the short term period. Coming to pound, the pound continues to remain weak against the US dollar, and obviously the relative strength of the US dollar continues to put pressure further on pound. But yes, currently the pound has corrected quite a bit and we could expect some rebounds in the pound. Yes, today we have the trade balance data and manufacturing data from the UK front to be released. Based on these two data, if we have slight better than expected data, we could well see the pound rally. So we would recommend a long in the pound just before the data has come in, and we could see some quite decent movement based on the data coming out. At current levels, we recommend to buy with a stop loss of 81.00 in the March contract. Coming to yen, the yen continues to remain weak and under pressure against the US dollar. So that similar trend has also reflected against the Indian rupee as well. Now yesterday we had a statement from the nominee governor of the Bank of Japan, that is Kurada, and he has clearly stated that he does not believe that the current quantitative easing measures are enough for the Japanese economy to meet its inflation targets. So it could well mean that as soon as he takes in power, he could bring in a lot of additional stimulus for the Japanese economy. Based on this data, we saw the Japanese yen fall to near 2009 lows. Also, the relative strength in the US, boosted by the expectation that the QE would reduce as the job scenario has improved, also put a further pressure on the Japanese yen. In the current week, we have major economic data to be released from the US front, which include the US retail sales data and the CPI data. If these data come in better than expected, again we could see further downside. A lot of research companies are also predicting that the USD JPY could rally up till 100 levels. At current levels, we recommend a sell in the Japanese yen with a target of 52 against the Indian rupee. Thank you.